Welcome back, everybody. You got Will and I in here from the Block Runner, and today we're going to be talking about one of our favorite subjects, the NAT token. Mm-hmm. And so there's some news. It looks like the number keeps going up, and so we're trying to figure out why is it doing that. And it turns out MEXC just delisted it.
Oh, okay.
Yeah.
That doesn't sound like...
It doesn't sound like it would be positive, right?
Yeah, that is kind of weird, right? NAT has this weird, vibe to it where it's like, people initially assume it's like once miners sell these things, the number's going to just crash. It's going to crater to zero. And
it always does the opposite.
Yeah, it's like, oh, if you get delisted from MEXC, it's over, right?
Yeah.
It's like, no, not really.
Yeah.
Not really.
Yeah, so that's the only thing we can point to that for the reason for it keep going up. And it's almost at 100% up since like 2 weeks ago, almost.
Yeah.
It's like 80 to 90%, something like that.
Right, and then the usual transpirings follow, right? There's all suddenly Ordi comes back to life.
Yeah.
Suddenly Dog. Suddenly these things that have no life of their own, they just tend to reinvigorate once NAT starts moving. I don't know what's causing that either.
Yeah, it seems like
also
NAT,
another weird phenomena.
Yeah, NAT's like the leading indicator for ordinals.
It's something. It's some sort of weird,
like lightning rod?
Enigma in the market that I think people, even we don't understand it anymore.
Yeah.
Like it's definitely got a life of its own, a pulse of its own, and it's just moving along, dude. But it looks good. Like if you actually plot out or look at the chart, the only real good one is like Super X.
Yeah, Super X is interesting because they've been charting the token since the launch of it, since the very beginning.
This is critical data that needs to be archived and stored elsewhere, maybe on our NatGMI site somewhere. I don't know, in case this goes away.
Yeah,
because this shows the whole picture, and to me, this is an interesting picture to be looking at.
Yeah, we see a lot of charts in our days, and we don't see charts that look like this.
No,
it's very different. So when it launched, this is a free and fair token. It's 100% distributed. There's no VC. There's no team supply. There's none of that. So when it launched, people just set prices, and clearly they set it like too high, so that's why it went down here. But then it was sitting, probably like between a 2 to 5 million market cap for like a whole year, and then there was the miner redirect, and then we see all these like miners selling, and then they're distributing, and all this stuff.
That right there was SpiderPool.
SpiderPool distributing.
So that was a big catalyst for awareness, acceptance, whatever you want to call it. People just no longer assuming like that this is like just a pipe dream, right?
Yeah, so there's essentially like two spikes here. So this one and then this one. So here is when Antpool started moving NAT, F2Pool, ViaBTC, and the miners started moving NAT. So they're just like selling it, and it's like and like you were saying, like you would think that miners selling NAT is a bad thing, but number went up. Mm-hmm. And then SpiderPool decided to start distributing the NAT to their clients, and F2Pool followed, and then you saw this like spike here, which created a new all-time high around 150 million market cap, and then it kind of like settled. But this is a 30 million market cap. That's like a 10x from the bottom.
Yeah, so establishing a solid footing or flooring around 30 million, it's pretty good.
Yeah,
I would say. And all this is doing is like extending like the Lindy effect around NAT, which is just it's maintaining its relevancy over like a longer course of time, which most things in crypto do not do.
Yeah.
If they have any kind of like up chart, it's typically followed by like a down only one and like a pure flattening. It's like they typically don't come back. So that's when they pass the Lindy test, right? Or they fail.
They fail. Yeah.
Yeah. So NAT is currently passing in flying regards.
Yeah, it's just not going away.
It's not, and I think because it's pretty obvious why. It's just the problem for Bitcoin hasn't changed at all since the beginning of NAT's existence, right?
Yeah, so we're going to go into the problem here. We have a new widget to kind of explain. But I have a tweet here by Tapscope. It says, MEXC just delisted NAT on this centralized exchange. This is why we built Tap CrossDex. So it's permissionless, fully self-custodial, spot and perps markets. No need to create transferables and cross-chain trading Ethereum, Solana, and Binance chain. And do you not want full control?
And do you not want full control?
Yeah, do you not want full control?
You got to emphasize that A. just because
Yeah.
you don't want it to sound like a standard boring knot. Dude.
Right. Yeah. So ultimately, yeah. So they created a technology here where you can essentially list your Bitcoin asset, and you can accept Ethereum, Solana, or BNB. So it's pretty cool. All right. So I want to highlight something here. So I don't know how to pronounce this guy's name. Quirzu.
I think that's appropriate.
Yeah. So he did something that I've been wanting to do, is create a chart that makes it easy for people to understand the problem. And no matter what price the Bitcoin gets to, the problem is always there. So even if Bitcoin's at infinity dollars, you don't have enough money to pay for security over enough time. And so he created this website here, and it kind of like depicts that. So what I asked him is that, hey, you know, this is really cool. Do you give me permission to add this to the NatGMI website so that people can, you know, really see it, right? And so he did, and I added it to the NatGMI site here. Oh, by the way, I updated the holder count.
Oh, holy explosioning, dude.
Yeah, so originally the number here was just on Bitcoin side, but then I added the
That's right.
Ethereum and the Binance side. And so, and there's like a few holders on Solana.
Yeah.
But yeah, this is roughly the holder count. So
jeez,
it's quite large.
It almost doubled.
Yeah.
Almost. It's like it increased by 30 to 40%, which is pretty cool. That means NAT is truly going global. not just like physically, but I guess like an on-chain global presence, meaning it's multi-chain. It's festering.
Yeah.
Right? Which is cool.
Yeah, so yeah, number keeps going up. That's always a good thing. But here's the new widget. So, all right, so let's kind of run through this real quick, and we'll go through what, let me see if I can make this a little bit bigger. We'll go through, there's this like kind of walkthrough, and it says down here, it says Bitcoin security budget is the total value paid to miners each year to keep the chain secure. So, and then here is essentially moving the year, and it goes up this power law curve, which that seems to be the going consensus on like the future projection of Bitcoin's price. And let me pause that and go back here. And it says here, by 2140, the block's subsidy reaches 0. The new Bitcoin issuance ends forever. So right now, miners are relying on the Bitcoin subsidy to pay the bills. And the thesis is that once the subsidy ends, the fees would take over. The problem with that thesis is that if fees are supposed to pay this for the security, then there is a natural cap to the market cap of Bitcoin, because fees can only get so high before people stop using the network. And so if they can get so high, that means that there is a natural ceiling to the market cap, because you're not going to protect a multi-trillion-dollar asset with a few $1 billion. Like that's not how this will work. And so, but that hasn't manifested, right? Fees are negligible. And so let's kind of like run through an example here. So what I'm going to do is let's start at the beginning, 2026, and we're going to leave this chart without the NAT token. And then what we're going to do is we're going to see what happens. So using the power law, see what happens when, as time continues, you see that the market cap of Bitcoin keeps going up, right? It's 27 trillion, which is a 10x from here.
Where are we in time?
This is year 2038. So we kind of like move fast in time here.
Okay.
And so what you're going to see here is the annual security budget as you move forward goes down, right? So that number that you're seeing there, the market cap of Bitcoin is 1.7 quadrillion.
Jeez.
And it's being protected by $6 billion.
So why is that happening?
And that happens because the halving keeps occurring over time.
Yeah.
And that means that you are mining half as much Bitcoin as you were the previous 4 years.
Right.
Which is another way of saying exponential decay.
Right.
So the only way you can counteract exponential decay is you have exponential increase in price. And even so, exponential increase in price is a kind of line that looks like a hockey stick, straight up to infinity.
Yeah.
And this power law is not a straight up to infinity line.
Right.
So then naturally, if this doesn't go straight up, then naturally over time, the security budget only goes down, and it goes down to zero. Why? Because in 2140, there's no more Bitcoin to secure. Yeah. And this is assuming that there are some fees, right? All right, so then we see that, right? The security budget essentially goes to zero, but what happens when you add NAT? So here's with NAT. So with NAT is you have today's market cap, this is wrong. So it's closer to 50 million. And it's only delivering about $50 worth of subsidy to Bitcoin per block. So kind of not a big deal. But what happens if you set here, then we're going to scale NAT to the percentage of Bitcoin. So what would you say is a good percentage that Bitcoin should be in relative to Bitcoin?
Yeah, I mean, if we're going with the security aspect of like, if Bitcoin fails as like it's, I don't know if Bitcoin is actually touted as like it should be regarded as like the security device. It is the
it's like a tokenization of security for Bitcoin.
Yeah, but it's definitely not like widely regarded as such. It's regarded as a store of value asset because of its like its scarcity property. Not scarcity. Scarcity.
Scarcity. Yeah.
It's not that scary. Its scarcity property is like it's the biggest feature highlight, I guess, of the thing, right? And that's what's attracting all this liquidity and interest in acquiring the thing, right? But ultimately, it still needs to serve as the security device to uphold the whole structure of the thing in the first place, right? In order for that scarcity to mean anything. So if it fails, which I guess this is like pretty accurately demonstrating that it will,
no matter what. Yeah, what I want to prove is that there's a smoking gun here.
Yeah, I mean, just based off what I've seen, I can't see Bitcoin as any form of security at this point.
Yeah,
it won't be. And if that's not the case, then it's got to be the fees, and we're assuming it won't be the fees for obvious reasons.
Yeah.
Then that has to be like that regarded as that security device, right? So in light of that, in that classification, well, when we pair that with nation states and what they have to allocate budget wise to secure themselves, to uphold their own existence and safety within the world, it's like 2 to 3%, right?
Yeah. That's so that's exactly what the United States spends on a yearly basis to protect the United States on the military budget. They spend $1.5 trillion. So if you put $1.5 trillion over the GDP, it's roughly 3%.
Okay.
So you want to go with 3%. So let's say that's reasonable spend for independent money for the planet, right?
Yeah. In order to send Bitcoin to Valhalla and to have like confidence and belief in that,
absolutely. You cannot you can't have Bitcoin at multiple quadrillion market cap as people are predicting without any security. It's not going to happen.
And it like siphon away from like boomer bucks,
correct,
real estate.
Yeah.
What else? Just
art and equities.
Art. Yeah, who cares about Picasso's at this point in time? Like, if Bitcoin is truly secure, we should be just parking all our value there, right?
Yeah. So we think 3% of Bitcoin's market cap is fair, right? Because that's what the United States spends. So what is the market cap today? So this is 2026. We have a 1.2 trillion market cap for Bitcoin. That is a $35 billion market cap.
Okay.
So that is less than 100x from here.
Yeah, so where would that put that? Let me just pull up trusty old CoinGecko. So you're saying like today?
Today.
Like if NAT was valued at its fair value to its like actual purpose within the ecosystem? You said what, 35 billion?
35 billion, yeah.
Yeah, I mean, that would put it right there, right above Tron, right between Tron and Solana.
What number is that?
It would be number 8.
Number 8.
Right now.
Okay.
It would bump Tron down to number 9, dude. I don't think anybody would have a problem with that, to be honest.
Yeah.
Yeah,
so, I totally
Tron
agree.
got flipped by Nat. That sounds appropriate.
Yeah, so let's take a look at the numbers here. So what does that mean when NAT is at 35 billion market cap? That means it's delivering $35,000 per block.
Yeah, that's significant.
Yeah, and today the Bitcoin is delivering $187,000 per block.
Mm-hmm.
All right, so that's just today, right? So assuming it's locked in at 3% because that's the fair value. Let's move forward in time. Let's do 10 years.
Mm-hmm.
So we're going to do 2036. Now, as you can see here, at $18 trillion market cap, at 3% of that is $542 billion. But what's more interesting is that if you go back 10 years, it's 16% of the block subsidy, and then you go more forward 10 years, and it turns into roughly 61% of the block subsidy.
Wow.
So, and it's delivering more money than Bitcoin is.
Yeah, way less the like capital float, I guess, or capital requirements of such, right?
Yeah.
Bitcoin's a much higher, and it's fine. It's justified, right? Because Bitcoin has this, immutable scarcity component to it, right?
Yeah.
Which is why it has this justified, much higher value.
Yeah, absolutely.
Valuation.
Yeah. Yeah, so now let's go to the extreme. So what happens in 2140 when Bitcoin is not delivering any value to the miners? Well, that the annual spend for Bitcoin goes to zero, but now NAT is delivering $272 trillion per year to the Bitcoin miners when the asset is worth what is that? 17 quadrillion?
What the hell is this, dude?
Yeah.
Are these real numbers?
This is what people think Bitcoin is going to do. This is the power law. It's just a.
And to them, this is like conservative,
right?
So it's like if you're playing this game, then you can't disregard all these other factualities around your like simulated outcome.
Correct.
You need to factor it all in and be very transparent and authentic about your projections. And like this is what's going to be happening 100 years from now.
Yeah. But the most important thing is, let's assume that power law is incorrect. It's something lower than that. The point is that NAT is delivering 100% of the value to the Bitcoin miners. Mm-hmm. And this is exactly what you want, because if there is no security budget, there is no Bitcoin. The equation doesn't get more simpler than that.
Yeah, and all it takes is like one disruption to that, maintenance of security, to really like shake the foundations of trust and confidence around like everything we just talked about, what gives Bitcoin its allure.
Yeah.
Right. All that's relying on security. So because it's done its job up until now, number continue to go up. So so it's pretty important.
One thing I'll include here is I wanna highlight Rome's post. So he did one talking about a different thesis. So our thesis is like the United States spends 3% of the of its revenue to pay for security, but he has a different thesis, and the article is called "Crypto Has Digital Gold. It Still Needs Its Digital Silver." So long story short here, I recommend you guys read it, but it basically says that if Bitcoin's gold, then what is silver? And so he's suggesting NAT is silver. So if you look at the market caps for gold and silver, the ratio is around 12% of gold's market cap, 12% of gold's market cap is the market cap of silver.
Yeah.
So 12%. So that means that in this tool, it's not 3%, it's 12%. And then now you have like a different, a new paradigm here in terms of gold and silver.
Bullishness.
Yeah.
It's like, FOMO, whatever you want to call it. Yeah, I always like that narrative too, and that comparison. Again, I think that's, I don't know, if you factor in like DMT and like the prospects around that and like the understanding of what NAT is a representation of and like what's actually been achieved, assuming these like simulated values actually play out to any like degree, it's converted Bitcoin into some sort of productive thing, right? Which is, I think, is why it's lacking in, market appreciation these days compared to like, its old days.
Yeah.
Where there was like a lack of, productivity in like the economy in general.
Sure. Yeah.
Since 2008 until like recent times. And Bitcoin looked good because what was happening in the time was, obvious government and institutional finance overreach. So it made the narrative of Bitcoin very attractive.
Yeah.
Very viable, right? But now in the context of today's time, there's a lot more productivity than what, Bitcoin or, our economic macro situation's been used to over the last like decade or two.
Mm-hmm.
That productivity is largely coming from AI, right? That's why you're seeing tech stocks booming.
Yes.
And Bitcoin not booming, right?
Yes.
So it's like the market clearly appreciates productivity, right? Over, just digital hard assets, whatever you want to call it, right?
Yeah.
But by making Bitcoin this productive thing, NAT was produced by Bitcoin, right? Since the beginning.
Yes.
And you have a whole new asset class that can also essentially emulate the same process and be categorized under the same umbrella of productivity. And like it makes Bitcoin just, to me, seem much more attractive, right?
Yeah, yeah. You're talking about using Bitcoin's block data for other purposes.
Right, that's what I mean. Like NAT is a obvious representation of like that working.
Yes.
To some regard, to some degree, and it's like the DMT as a whole is an extension of that to so many different corners of possibility, right?
Yeah.
So what does that do? I mean, it just adds to the FOMO, right?
Yeah, I mean, I think coming up with different use cases for Bitcoin is what leads to this number getting closer to 12%. And it's already happening. And the first example was NAT. The NAT is addressing a big problem within Bitcoin that nobody is talking about, but everyone will be talking about this. It's just a matter of time. And so if you think 12% and 3% is too high, go ahead and play with these numbers, and I guarantee you, no matter what percent that you get, that you put here, that it's going to do way better than Bitcoin as a security budget. So go ahead and play with this tool. And there's a bunch of toggles here. There's a with or without NAT here. There's the fee scenario. This assumes a baseline fee. So if you assume pure congestion, meaning all the transactions are completely filled, then you can activate that and you'll see that this number doesn't matter. And then you can scale NAT based on a market cap or a percent of Bitcoin. And then you can show a security line, which is hide or show. And then you can see the security line has a bottom, and that's what you want to see, value being driven to the miners. And then eventually we'll add different curves here, right? In the future is going to be some other curve. We'll add it here, and no matter what that curve is going to be, does not matter because it's not going to be an exponential increase in Bitcoin's price. So, yeah, this was on the homepage of the NatGMI site, so go ahead and play with it. And yeah, I think that's it. All right, guys, that's it for us. That's been NatGMI. It's been the NAT token. Let us know if you're into the NAT token, and if not, let us know if you have any questions down below. Appreciate you for watching, and we'll catch you in the next video.
Peace.